So hi guys, welcome back to our channel and to the 26th episode of the Forex Market Breakdowns. So today is on Tuesday. We are going to go through a couple of setups. We have been analyzing the markets and stocking. We have some positions and we also have others which we are stocking and watching. But before we even go down to the technicals, I think it's important first of all to highlight some of the things that are going on in the fundamental space. For us, we have a combination of both fundamentals and technicals. So probably 20% of our ideas come from fundamentals, meaning we try and peg the direction of the market long term on fundamentals. And looking at fundamentals, right now we have a couple of things that are interesting. One is we have the Feds. The Federal Reserve is expected to deal with the interest rates. So on 31st July, end of this month, we'll be having the Federal Reserve, if they'll be announce if they'll be cutting the interest rates for the dollar, or if they'll be leaving the interest rates unchanged. Most people are pricing in a cut, and the markets are already reflecting that. If you look at how markets are behaving, we have stocks going up, we have gold going up, and when you look at history, when there's a rate cut, definitely, when the first rate cut happens, we have long stocks, because a rate cut means weaker dollar, and weaker dollar means more imports and more exports, for for the companies in the United States, and then the companies in the United States export more. It means more revenues, and definitely more revenues means higher prices in the stock market and in the share prices of most companies. So we don't know yet if there'll be a rate cut. Most people are waiting for non-farm payrolls last week on Friday, and non-farm payrolls came out better than expected. So definitely data guides the Federal Reserve, and data, once it was out, probably they'll be delaying a rate cut, or if they'll be doing it, they'll probably do it less than what the market's expected. So probably people are talking about 3 to 5, but we don't know what will happen, so we are waiting. So we might see some sideways movement in the market because of the indecision. We obviously have trade tensions between China and the United States, which have now cooled off because of the talks which are going on, and that also brings in more risk in the markets. So we have several assets that you're looking at, because you also know, you guys, you've seen us looking at gold, you've seen us looking at silver. We have now actually brought in copper, we have cryptocurrencies. So we try and access what is going on around it, but mainly we look at the foreign exchange market, which is what we are trying to share with you guys. So basically that's what is going on. For those who have been trying to ask me about the data releases, about the fundamentals, I'd probably recommend that you read about 3 or 4 books. One book is called Principles for Navigating Big Debt Crisis by Ray Dalio. It's a book on how debts occur and how countries go through a debt, a deleveraging, a recession and such things. So it has a lot of history in it. We have the Weimar Republic in 1990s. We have the 1929 depression all the way up to the 2008 depression. So that's a good book. We have another book called Mastering the Market Cycle by Howard Marks. So it's also a book about basically the market cycle, what you're talking about. When the longest phase of a cycle, 11 years of an expansion. So we have never seen an expansion for 11 years without a recession, and definitely we expect a recession to be coming in. So when there is such an event, definitely you have to go back to history, look at what happened, look at how monetary policy makers deal with this event, and then bring that to what is happening currently. Try and extrapolate the probabilities. Doesn't mean what worked in 1929 is probably what worked in 2008, and what worked in 2008 does not mean does not translate to what worked in 1929. So currently we're in 2019, longest expansion since 2009. So 2009 to 2019, 10 years into it, an expansion. 6 months into 2019, stocks have had the best year because of the expansion and all that. But definitely that should tell you that risk is going higher on the risk spectrum. We're expecting a downturn, definitely, because even if markets will be going higher, we don't expect them to go that much higher. So pegged on that, definitely more volatility is expected to come back to markets, with downturns, with fear as the driving emotion, with panic as the driving force. Volatility is higher. When volatility is higher, for traders we advise playing small positions. When it's lower, you have to play high positions. Anyway, those are some of the things that I wanted to share with you before we go into the charts. So I'll now just go back straight into the technical analysis, our 80%. Try to look at what is happening here, and now when you look at what is happening here, you can combine that with what I've told you, or what you learn from the books that I've told you. Actually, I've told you about 2 books. There's another book, a third one, called How Markets Really Work. It's a book done by Bloomberg. I can't really remember the authors. It's also a very good book that can help you understand market cycles and what happens in the different market cycles. And then there's also another book called The Most Important Thing Illuminated, and there's a chapter 13 or 14, I think, talks about the importance of cycle. It's also a book by Howard Marks, and these are some of the best investors, having done it over 43 years, and they're sharing that wisdom with you in a book. So you can choose those 3 books, dedicate some 3 to 4 hours, try to understand that, look at history, and then translate that to what is happening currently, and you'll definitely be able to at least form some themes or ideas which can help you in positioning yourself and trying out to make money. Don't forget to manage risk, and don't forget to assume. Don't forget to manage risk, definitely, and don't assume that just because you have an hypothesis, it must be right. We know in the markets, the first rule is protecting the downside. The second rule is you can always be wrong. So the goal is to minimize risk while trying to maximize reward. So with that said, I'll just go straight into the first charts that I'll be doing, and I'll start off with gold, then I'll move on to other 3 pairs that I'll be doing before we close off the day. So this is gold on the daily chart. On the weekly chart, there isn't much that you can deduce from that will be helpful in decoding what's happening on this commodity for now. Looking at it, yeah, so you can see clearly last week gold closed above the R2 level. I expected some more momentum because we were above this channel, but today you can see during the open we still have some downward pressure pulling this one down. So going down to the daily chart to decode the patterns that are developing, I have come up with 3 probable scenarios. One is we have taken out this channel, we have had the Elliott wave 1, 2, 3, 4. If 5 is to come in at this point, then probably we'll get a correction to 1360, 1340, 1355. If that's the key. But for us to get to 1360, 1340, 1355, before that we have to bypass 1385. So if we get a good close today below the pivot point, below 1385, then probably we'll be seeing some significant downside momentum to 1360 first and 1355 before going back higher. But before that, I can go down to the 4-hour chart. So on the 4-hour chart, I have several outlooks that I have. One is we've had this move upwards, and after the move upwards we had this correction, and after the correction definitely we had the formation of this line. So probably gold will sink into 1385, as I'm telling you. 1385 will be respected and the markets will come back higher. If the markets come back higher, I have 2 targets. One is we could probably have entered a consolidation, as you can see clearly, 14 to 35, 1385, 1385, 1435. What makes you think this cannot repeat? This could be 1435, 1385, and again from 1385 to 1435. So that's also an outlook that I'm looking at. Probably we are entering into a ranging market and we'll have some more bounces, but that is pegged on one again. A break below 1385 definitely nullifies the idea that I have, and a touch of the line if we get a break below that. So for now, I only have those 3 that I'm looking at, but you can also plot this line from the 4-hour chart, and you have those 3 bounces, and you can again clone this one, and you get that boom. So if you're going back lower to touch this channel, then probably we're looking for 1370, 1360, as I said, before momentum comes back in the market. So right now I don't have any position on gold. I had a long position which I've closed off because I expected 78.6 Fibonacci retracement to be respected first of all. So there was this move that I expected will respect this 78.6 and you'd get a move back upwards. But since I now don't understand pretty much what is going on, so I only have hypotheses, I want to first check what the markets will be doing before deciding how I'll be playing these markets this week, or probably I'll even stay outside and wait for something to develop that I can understand. So that's my outlook on gold. And if I can draw this line, yeah, so you can see 1385, there's a lot that calls for bullish setup at 1385. there's a lot that calls for some demand to be coming in at 1385, and if that happens, then probably we'll see gold go back up first to 1435 as my target for the ranging market, and after we break past 1435, probably we'll go up to 1450, 1480, and ultimately 1500. But I don't think we'll be going to 1500 before the Federal Reserve announces the decision on interest rates. So that's my outlook on gold, and I'll go down now next to the next pair. So the next pair I'll be looking at is Euro, and today I won't be looking at some of the pairs that I normally do, because most of the setups that I gave out last week were long setups, long directional setups, and I'm still holding into them. I expect some short-term shifts in supply and demand which are happening, but I'm holding some of the positions that I talked about. So going down to the weekly chart to start off on Euro Yen on the weekly chart. So on the weekly chart, I have two distinctive channels. So I first can remove this one, which was respected some time ago. Then I can also remove this one or bring it. Okay, let me just remove it. So we have this downward sloping channel, and you can see currently we are trading at the S2 level. S2 is really a strong level once it comes to the weekly chart, especially because this is a level which was plotted for several weeks ago. So S2 definitely becomes a strong level. So the markets are trying to break past 121, which has proved to be quite a task, and currently we have seen the markets move sideways for quite some time. So if we go down to the daily chart now to develop the patterns that will be trading on this pair. So this is the daily chart. One, we have this downward sloping line, so we have wave 1, 2, 3, 4, 5. Caleb can do that better than I can, so I won't go into the emphasis of plotting the numbers. If you are interested in understanding the Elliott wave pattern, you can one, ask Caleb about it, or you can also choose some books to read about the patterns. My style of trading, I look at it from the perspective that this is a ranging market. So Euro Yen has been bouncing off between 123 and 121. So we had this bounce, then you had the second bounce, the third bounce, and now the fourth bounce came in. But now the markets never got to 121. Instead, we respected the 78.6 Fibonacci level, and we have started moving higher. In fact, this pair is moving counter trend to what I expected on euro dollar. So probably we'll be seeing the yen getting stronger here, while the dollar may be getting weaker. So euro yen might be heading in a different direction totally to what will be happening to the dollar over the coming few weeks or months. That is probably what I'm talking about. So if I plot a line from this point to this point, this was the third line, the third bounce of the line, and probably if we get a break past 123, then I'll be looking for 125 at 200 pips on. On the way to 125, we'll get to 124. So if you go down to the 4-hour chart to get the exact target of this long trade, if you're on this bullish trade, you get that. Yeah, so if we use this to plot it, yeah. So this was 78.6, 27.2 comes in at 124, the level that I was talking about. So if you get a break above 123, then you're looking for 124. But you should also be keen. Probably this will be 1, 2, we'll get to P, then we'll get a drop all the way to S2. So a drop from S2, which is 122.179 to 121, 100 ticks. So I've given you two setups. One is two probable scenarios, One is a move to touch P, reject P, and you get a drop all the way to 121.0. So if you are long, you could maybe liquidate at that point if you spot a bearish setup. Another option is we'll just get a straight leg piercing past R1, heading to R2, and ultimately touching 124, fulfilling the pattern that I showed you on the daily chart. So that's basically what I'll be covering today. I've given you two of the best setups that I'll be looking at and the two scenarios that we'll be looking at. So I'll leave the floor now to Caleb to come and analyze the pairs that he'll be taking you through.
So hey guys, you've heard it from the horse's mouth himself, Ken. He's covered fundamentally why we think the market is reacting the way it's reacting at the moment, why there's a lot of volatility, why people are really looking at gold and the US dollar. We are really waiting for the end of this month between 30th and 31st of July to see what the FOMC will decide during the meeting about the interest rates, whether they'll cut it or whether they'll leave it flat. So all that has been factored into the price, especially after NFP was released, which Ken talked about and said it was better than expected. And that really indicated what we might see happening during the FOMC meeting. Many people are waiting for really low NFP results, which will indicate a really slow growth in the United States, which will lead to a cut of the interest rates, which will stimulate the economy. But since it was better than expected, we'll just have to wait for the FOMC meeting to know what they'll decide. So apart from that, let's just get into the markets technically and look at USD CAD that we covered last week and follow that with Aussie dollar. Then we finish today's analysis. So yeah guys, we're down to USD CAD and this is the daily chart. As you can see, we broke out of this line that we saw. We've covered this last week on the video, and now we're respecting this newly formed channel that we have, and we sort of got a support at 1.3050 in line with the Fibonacci extension level 161.8%, I mean, and market has been moving further up. If you go down to the 4-hour chart, which you can get a better in-depth analysis of what has been happening, we covered this last week and we can see we came down within the channel, had a retest of the line that was broken in line with 61.8 Fibonacci level, and market moved all the way down, being attracted to the extension level 161.8 as we've seen on the daily chart. When we're coming to this level, we had a slowdown in momentum. There was no much volatility, and market entered another channel formation, which we cover also on our trading course, and we came all the way to this level and we were capped by 1.3050. Ever since, market has been in sort of sideways movement, a consolidation. But if this level is broken around here, we can see the market move and rally all the way back up to our channel again over here, and maybe have another move down. As we covered in last week videos, this is just a follow-up, nothing much has happened. We said in the last week video that we might not get a break below this level because of the support region that is here, which is really strong. So markets can move all the way back up here before we get that move further down. So that's what we're basically watching on the USD CAD. It won't take long because we covered mainly. If you haven't watched last week videos, you can watch it so that you can get a better understanding at that. So that's basically what we have, and now we can move down to Aussie dollar. So yeah guys, we're down to the Aussie dollar chart. As you can see, we've been within this ranging market that has been forming for a very long time, since last year June. So it's been more than an year. We've been within this channel, going down, having a lower high, lower low, lower high, lower low, and currently what we're having, we're sort of entering sort of a ranging market, which market came and found a bottom over here, rallied all the way back up to 0.7025, came back down, touched our target level that we were anticipating at 0.6850, and we came back, retested it again, and now market is sort of in a limbo. It's in a no man's land at the moment. So we are currently falling. And what I see happening, as I covered in last week's video, that we might be entering sort of a ranging market, and I really anticipate a break of this channel to the upside. But before that happens, if you go down to the 4-hour chart, so if you take a look at this, what is happening at the moment, we had this trend line that was beautifully broken, that we had from up here, and market came down and came and broke up above to touch our resistance level 0.7025. And last week I remember I had an analysis saying that we might get a downward momentum to come and retest this, which we're currently seeing the market respecting, and the market is coming down to that level. This arrow that I've drawn is same distance from here around this level all the way to down here. So we're anticipating a retest of that in line with our Fibonacci level 61.8 or 78.6, depending on which one will be retested. So if market is able to break down below this level, which I'm not really favoring, I'm more favoring a touch of this, then we have a movement to the upside, something of the sort. So within this level, that's what I'm anticipating. But currently we're seeing a lot of strength from the dollar, so if that momentum is maintained, we'll see another movement down below this level to come and bounce at this level, the ranging market that we're seeing on the daily chart. So that's basically what I'm anticipating. But right now we are falling all the way down to levels of 0.69, between 0.69 and 0.6920. That level is what I'm really anticipating, and after that we might have a movement all the way up. So that's what I'm watching, keeping in mind that the US dollar, there's a lot of strength from that market because of the positive news that came out last week during the NFP, the job rates that Ken was talking earlier about in the video. So we're really watching that and waiting for also the FOMC at the end of this month. So that's basically what I have. I'll be doing a follow-up on our WhatsApp group as we always do, and also on our website group. So if you have not joined, you can click below and join that group. So apart from that, I don't have much to say. We've covered the basics that we wanted to cover today, and we'll leave it at that. So make sure to like, share and subscribe, and wait for our next video next week. So that's it from me, guys. See you next time.